Welcome to the Interaxis channel and Interaxis.io. Today we're going to talk about how it's kind of conceptual, but crypto investing is international investing, or can be international investing. We're going to kind of talk about this concept and what we think of it. But first, remember, if you're watching this on YouTube, please subscribe, follow us on Twitter at Interaxis8, the number 8, and visit our academy, interaxisacademy.com, where you can learn more about how to learn about investing in crypto, how to learn about DeFi, how to use cryptocurrency, how to think about crypto and digital asset investments as part of a portfolio. So now we're going to talk more about, again, crypto investing is international investing, or can be international investing. What do we mean by that? When we talk about being able to invest internationally, and of course I'm talking mostly to people who might be in the US or might be in the EU or somewhere, where you pretty much, if you're investing in equities or in companies, in stocks and such, you're investing for the most part locally or relatively locally. And part of that is because you're bound by geography. You're bound by compliance and regulation and what you are allowed to invest in. So here in the US, for instance, we can invest in terms of public companies for the most part. We can invest in whatever is available to us on the New York Stock Exchange, on NASDAQ, and maybe if there are some smaller stock exchanges, some private or penny stock, over-the-counter type stock exchanges, we can invest in some of that. We can't necessarily invest in companies that are only traded in China, Japan, in Singapore, in Asian countries, or only traded in Europe, or only traded in England or something. We can't invest in those. The only way we can get that type of exposure to those companies is if they come to the U.S. and they offer or they get listed on one of our exchanges as an ADR, an American depository receipt. Okay, that's really one of the ways we get exposure. And when I say exposure, what I mean is I don't necessarily, or maybe as an investor, I might not want all my money invested in companies that are only going to profit based on what happens here in the U.S., or all of their operations are in the U.S., or most of their operations, or all of their accounting or all of their regulation is based on the U.S. I might not want that, because there might be a time when the U.S. overall, the U.S. economy is not performing well, but the Asian economy is performing well, or the European economy, or the African economy, or the South American economy. Some of those economies might be performing very well, or there might be pockets there that are performing well, or some new technology or some new market there that's performing well, and I want to be invested in there. It's not always going to be the U.S. That is part of diversification. So diversification is not only asset classes, it's not only growth versus income versus alternative, but diversification can also be geographic, and maybe I want to diversify geographically. And part of what I might want to do is have access or have exposure to what's happening in other countries. But there are only certain ways that I can get that exposure. Of course, I can invest in monster companies like Apple and Amazon and Google that have operations all over the world, and therefore by investing in that company, I'm essentially diversifying because they're diversifying. It's like investing in a fund that is choosing to diversify internationally. So a few of the ways, though, that I can invest internationally is I can invest in what's called an American depository receipt. Basically, that's a foreign company, a company that's domiciled outside the U.S., who comes and lists on one of the U.S. stock exchange. Okay, I can do that. Alternatively, I can invest a lot of times in international funds. Okay, and we see these a lot, especially in retirement plans and 401ks and IRAs and such, where there will be an international fund as part of a 401k, as part of the options in a 401k plan. There's usually one or two international funds. They usually actually have relatively high fees. And the reason why they have high fees is because they require someone to go to other countries, right, or be on the ground in other countries, and have to do the research on these companies that are publicly listed in these other countries. But also you have the problems of the risk associated with currency, the risk associated with maybe the stock exchange and the regulatory environment of those countries, how they list them, if there's any sort of corruption or anything in regard to the exchanges, in regard to those companies, in regard to the government. You're exposed to all of that risk by investing companies that are publicly traded in those countries. And then again, you have to pay someone to go do all that research and figure out, of all these countries in the world, or all these countries in this particular region, which are the few companies that we really feel comfortable with. And then we have to look at their management. We have to look at what the addressable market is of their particular product or service within their particular market. How much money do we think they are going to make? How are they generating revenue? What does their revenue stream look like? All of those things, and do all that research. And in order to do that, you have to go into a fund where you're basically asking some other manager to go make those assessments for you, and you're paying them quite a fee, and all you really get is whatever they've chosen for you. Now, they usually tend to perform relatively well in relation to other international funds, in relation to whatever is going on in that region or internationally or in that country. Now, if you want some different type of exposure, of course, you're not going to get exposure to startup companies, small private companies, smaller companies. You're not necessarily going to get exposure to whatever the trends are of that region or that country. So why do I say crypto can be international investing? Well, this came about actually because someone wrote a comment to one of our other videos here talking about a particular token that I won't mention, not because I don't want to mention it, just because that's not really relevant right now, but a particular token, a particular chain that has a token that is performing really well, that is utilized very much in other countries in Asia. And that got us thinking, wow, that's really incredible, because if you go look at the data about how a particular token is used and traded in another country, right? So if you have a token, let's say it's a token that maybe is a governance token for a particular stablecoin, okay, and there's usage in, high usage of that stablecoin in Asia. Well, then I can go, well, what am I seeing? What is happening that's making them use that? Maybe there's a growth in wallet usage or wallet downloads in Asia. Okay, I can look at these kinds of metrics, and of course we've done videos on looking at different new investment metrics to help you invest in crypto. So this is kind of where that comes in. I can maybe look at the what's happening with the governments in Asia. Are they printing more fiat currency? Are people worried about the banks and the regulation? Right? What is happening to the regs in Asia? Are they lightening up regulations on digital assets, on cryptocurrency? And therefore some of these, and again, I'm only saying Asia, this could happen in Europe, South America, Central America, Africa, wherever it might be, but this is kind of what you can go through. And then go, okay, if more people in Asia are downloading wallets, the governments are relaxing regulations on stablecoins or relaxing regulations on cryptocurrency, but are also printing more fiat, for instance, and therefore the value of this should go up. Maybe people in certain parts of Asia are wanting to utilize cryptocurrency and stablecoins more. Maybe it's a time kind of like COVID, where people aren't allowed to go anywhere. They're not allowed to move around anywhere, but they can still send things and they can still do things via cryptocurrency. Maybe there's some new game that came out that is popular on, in certain Asian countries where they are utilizing their phones and they can utilize this particular cryptocurrency, and you can do that research. And by doing that, you can go invest in whatever this, we'll call it a governance token or whatever it might be that regulates a particular stablecoin. You can go choose to invest in that. And what you're doing is you're essentially giving yourself exposure to whatever is happening in this part of the world, and you're able to do it in a high-tech company, in a startup company, essentially, in this startup protocol, and you're able to participate in the growth. And if you go, look, there's more, if Asian population is trending younger and they're downloading more wallets and they're using more cell phones and there's more 5G technology, whatever it might be, they're already used to electronic payments. This isn't going to change it that much. Maybe you find out a bank over there in Singapore or in Japan or something starts allowing crypto custody, and then you put it all together and you go, wow, I think this one or these two particular cryptos that actually have a big footprint already in Asia, they might be big. I'm going to go invest in them. Again, we're not giving you advice. We're not telling you to do that. But this is how you can take some of these new metrics and some of this data that you might have access to and go look in other parts of the world and be able to get yourself some exposure. We're not looking all the time for the 10x, the 20x, or the 100x return. What we're saying is this is a way for you to diversify geographically. And this is where cryptocurrency and digital assets can be a way to diversify geographically, because you might see where some of these cryptocurrencies, these governance tokens or DeFi tokens, are getting more of a hold in other parts of the world, and then you can go and do your research and figure out what the metrics are that would inform the growth in those parts of the world, inform the growth of these particular cryptocurrencies. You can do your research, your own research. You can probably find that data and figure out maybe this is a good investment. And if I'm here in the U.S. or I'm in the EU and I'm going, my gosh, we don't really need stablecoins all that much. We don't need this particular crypto. We don't need that protocol. But I can look in other parts of the world where they might need it and say they really need it here, they really need it there. It's starting to get a hold. Here are the particular stable coins that are starting to be used there. Here are the protocols that are starting to be used. I see where this bank is allowing it. I'm going to start investing because of what's happening in other parts of the world, and therefore I'm giving myself some international exposure. I'm saying, look, even if my part of the world, my region, isn't really growing like I'd like or growing to help my investments, these other parts of the world are, and I'm going to figure out what investments I can make without having to go through an international fund or without having to wait for some of their huge public companies to come get listed here in the US. So that is really briefly some of our thoughts on how crypto investing can be used to diversify you internationally. Again, you got to do a lot of your own research in this case, but of course, in the future, going forward, there is going to be more research available. There are going to be more people thinking about this. You can already look at Masari and Delphi and see some of the data and some of the information that's out there that they're helping to disseminate this, to bring some of this to you. You can already go look at it, but that's some of how crypto and DeFi and digital assets can help you diversify internationally, can help you get international exposure without necessarily having to go through a fund, which might be expensive, or go through an ADR. So we hope you enjoyed this video. We hope you'll subscribe. We hope you'll check out our academy, interaccessacademy.com. Check us out on Twitter @interaccess8, and we'll see you in the next video.